How is it that your business is making a profit on paper at least, but you've not got no cash in the bank? Well, there's 10 things I've recorded here that will help you to understand this. Firstly, tax payments. So when you're paying your tax, it's not an expense of the business, but it is coming out of your bank to pay that. Secondly, every time you buy an asset, so whether that's a vehicle, another bit of plant and equipment, often they're written off over a number of years, so you're not actually seeing the financial impact from a profitability point of view for a long time, but that's coming straight out of your bank account. Likewise, when you're selling assets, that's a positive thing. It's adding to your bank account, but doesn't impact your profitability. The other thing is, as an owner, if you're taking drawings from the business, so in other words, you're not taking an official wage, but you're taking money out of the business to live off, that will obviously be impacting your bank account. It's an obvious thing to say, but what we find is often if there's not a set amount of money that you're withdrawing as an owner, over time, as in 12 months, it can really add up. And this is one of the common causes we see for businesses running short of cash, is owners not realising how much is actually getting withdrawn from them. Now, another reason you can be struggling cash flow wise and bank balance wise is if your customers are given credit and maybe they're not paying as regularly as they were, then what we find is you'll be owed more and more money in accounts receivable, but you haven't actually received the money in your bank yet. Likewise, if you're building up a large amount of either stock or work in progress, if you're like a manufacturer, what you'll find is a lot of your money will have gone to pay the suppliers to either purchase the stock or buy the materials to make the finished product. And if you haven't finished that off and sold it, that's where your cash could be sitting. Now, the other thing too is if you're, like we always encourage our clients to pay their suppliers as quick as they can. But what you will notice, if you traditionally have taken 30 days to pay your suppliers and you suddenly drop that down to 10 days, you will notice for a time that the cash flow will really tighten up from a bank account point of view. So it's more a case of just slow. If you want to pay your suppliers quicker, that's okay, but just bit by bit improve on the situation rather than just paying everything overnight if that hasn't been your traditional approach. Now, the other thing to keep in mind is you might have various either bank loans or plant and equipment loans in place. Now, they'll be taking money out of your bank at least every month, for some people every week. And these are where we find one of the most common causes of cash flow shortages come from, because on their own they're not much, but by the time you've got 4 or 5 bits of equipment with loans over them, they certainly add up. And finally, just the thing I wanted to cap off with any of this is it's about getting an awareness of where your cash is going within the business and why you can look like you're profitable but you're not from a cash flow point of view. So if you're at all concerned with your business that you're not getting ahead, by all means, make contact with us. We're happy to have a look over the books with you and give you some feedback about where some improvements could be made.